Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, June 20th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'll start with the big picture as always, work our way into the day itself. Just a reminder that the 1-year trend as defined by this 214.05 channel top remains bearish. Rallies up to 214.05 should be considered sell opportunities through the third quarter, even into later year. From here, we can fall away to channel support. That is over the next month or two, converging with that January 101.81 low, January of 23, I might add. So heavy below 214.05, bear market, lower low, lower high dynamic, clearly defined. Now we may see 214.05 over the next few weeks. We do have ourselves a buy signal above 183.83. Now, I wish I could zoom in here. Maybe I can open the chart up just a little bit. I could think we got that all going on right here. I'll spend a little time on this chart. So if you could see this 183.83 channel top, it actually shows up better here. We have the mid band here that held nicely, and then we closed above that. It held last week. Now we're above the primary formation at 183.83. So I am going with this buy signal still. And just keep in mind that these near-term buy signals within the confines of a long-term bear market are prone to failure. And I think you know that. So holding above 183.83, though, will keep that 214, the mid 210s in reach over the next 2 to 3 weeks. Now, in terms of upside clarity, confirmation, I think we've got a couple of points that you can watch. I do have 187.44 as an intraday resistance level. This may well contain daily buying pressure. It's hard to say, but, assuming we open today above this 183.83 channel top, I still see no good reason to be a short seller as we move through the rest of the week and into next. I do think this market, assuming we close today again above 183.83, and we closed above it on Monday and Tuesday this week, which set off that buy signal, that remains in effect above 183.83, anticipating really it's this 213.33 channel top over the next 2 to 3 weeks. So whatever that means to you, if you just refuse to go short with this buy signal that remains above 183.83, or if you want to go long, I don't have a problem with that either. If you're long or wanting to go long now recently above 183.83, I do think just merely closing today above 187.44 should spark follow through buying tomorrow and into early next week. This 198.29 extreme channel top in reach over the next 3 to 5 days above 183.83. And over the next day to 3 days above 187.44. And yeah, we have got 186.55 inside of all that. That is the high settlement price that was put out on Monday. That is just a minor point. Closing, though, above 187.44 is a sort of pull away factor on this very recent 2 to 3 week buy signal. We should then, within 3 to 5 days, 2 to 3 days, see 198.29. 198.29 is really part of a range of resistance, as you can see, up to 200.11. 200.11 is actually a longer-term 3/8 upside Fibonacci from the July 23 high against that more recent April 24 low. And this area can give the market trouble, 198.29 up to 200.11 on a daily basis, possibly a 3 to 5 day basis. But really, holding above 183.83, I make room for a 2 to 3 week rally now to 213.33. But as I say, longer-term bear market, 1-year bear market remains in effect below 213.33, and so a failure to reach 213.33 would not come as a big surprise to me. I'm not expecting it, but so this is sort of a we're at a tipping point here, And I think if you're to skew one way or the other directionally over the next several weeks, it is upside above 183.88, and that becomes further clarified with a settlement today above 187.44. 3 to 5 day swing traders can anticipate 198.29 to 200.11, where profits can be taken, and you may consider playing the short side, 198.29 up to 200.11. This is a meaningful resistance area, and yes, if settled above, should within a matter of 3 to 5 more days yield that 2 to 3 week objective at 213.33, where profits can be taken on a 2 to 3 week long position and short entry made over the same time horizon and even really through the third quarter. If we are testing 213.33, which is 214.05 on the weekly bar chart, you may reach for perhaps 101, 102 strike out of the money puts that don't expire. I would probably go a full year out on that expiration, even though I think this is more of a 3 to 5 month downside bearish rotation. Of course, if we were to close above 214.05 in the coming weeks, that would indicate a good annual low, and I would expect meaningful gains as we move through Q3, Q4, the following 3 to 5 months in reach of the 320s, 330s, which I will show if we approach 214.05. Now for the downside, if we close today below 183.83, that is a failed buy signal and should be respected for its sell signal qualities. So closing today back below 183.83, I think over the next 1 to 3 days we fall back to 174.27, but over the next 2 to 3 weeks following a settlement below 183.83, it is this 161.18 channel bottom that I would anticipate. 161.18, a 2 to 3 week target. We could get there sooner following a settlement today back below 183.83. That 161.18 formation able to contain weekly selling pressures. We could round up from here for a matter of 1 to 3 weeks. But finally, a closing below 161.18 is your go with sell signal on weakness. We are, after all, in a 1-year bear trend. And so playing the short side is the more, how should I say, reliable approach. And I don't want to stretch that. I don't want to get too bearish here, but I will say that given the fact that we remain in a 1-year bear market as defined by 214.05, a settlement above 161.18 should be respected for its ability to really predict the low 100 area, 112.40 and dropping as a 1 to 2 month objective were we to close below 161.18. But we're not there yet. We need to close today below 183.83 to indicate that 161.18 formation within 2 to 3 weeks. So if you are long the position and you are along the market, you're long Tesla right now, anticipating 213.33, and if we close today back below 183.83, you may consider reversing and playing the short side. As frustrating as that may be, then anticipating 161.18 where profits can be taken, and sure, long entry made as we move into later July, but closing below 161.18, I would see no good reason to be long Tesla as we move through the rest of the third quarter. I think that pretty much rounds it out. I'm going to leave it at that for Thursday's Tesla. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of our 5-day free trial. You get the daily triple Q and SPY analysis, 2 stock picks a week, so forth and so on. I'll be back tomorrow with Friday's Tesla, and you have a great day.